Good afternoon, everyone. Thank you so much for taking the time today. We obviously want to make sure you maximize your minutes with us. You walk away with some sales ideas and nuggets, right, to change your practice. What are we talking about today, right? This week on the live weekly webinar training series, we have Allianz. We have the number one rated IUL product and carrier that we are taking a deep dive into with our VP who is joining us. So, great stuff to come. We're going to share some sales ideas. We're going to share some comparisons, some the latest stats from 2025 when we're looking at all permanent products, especially whole life versus IUL. We're going to share the facts. We're going to share everything in between. And we're going to make sure you have some good social media posts and strategies that you can start using, right? Hopefully tonight or tomorrow or during the weekend, whatever it is. But we want you to open more doors, right? To have the conversation, which is key. What I want to do first is also talk about before we wrap up at 3 p.m. today, 3 p.m. Eastern Time, we're going to have our giveaway. So we're going to ask a question at the end, like we always do. Whoever answers first and correctly, we will announce your name, and you walk away with a pair of Apple AirPods and our IUL prospecting book, our latest version. So make sure you're on until the end. Make sure you're paying attention, and make sure you use that Q&A pane. Okay, if you have any questions, comments, please fire away. We were going to answer every single person in real time. If we don't get back to your question in real time, we will circle back as soon as we hang up this call. Also, everyone, every attendee is going to get a thank you email before we wrap up this evening. So this will be in your inbox, and we will include all of the brochures, the guides that we're going over, some of the stats, and of course, contracting. So if you're already appointed, maybe it's not with Levinson, hopefully it is, but if it's not, you can transfer that appointment over to us, and we typically match or beat. Usually we beat your existing commission, plus you get cash for contracting or orphan leads for contracting with your first paid application, and you can leverage our scholarship program for free. And Allianz is one of the approved carriers in the platform. So these are lots of things, lots of value add that you get by working with Levinson and with our carriers, especially Allianz, because there's so much value add here that we're going to talk about as soon as our feature presenter is done. So make sure, again, you're on until the end. So what are we talking about today, right? Let's dive in a little bit deeper is permanent products, right, in today's landscape. If we can go to the first slide here. So, we have a ton of agents out there, right, from Key West to Hawaii, literally, in Maui, Hawaii. We have an agency. In fact, they're coming to our expo this year, which is only 6 weeks away. But the point is, we get it, right? Lots of you specialize in the large case market, right? Maybe you team up with CPAs, estate planning attorneys, and IUL like the back of your hand, whole life like the back of your hand, okay? And that's great, okay? But what I'm going to promise you is you will also walk away with some new ideas and stats and strategies, right? And then, we have agents in the middle, right? Maybe, yeah, they focus on IUL here and there, but their bread and butter is maybe final expense or term policies, even health insurance, maybe P&C, and then they're cross-selling, right, to open doors, and they're not as familiar with IUL and whole life, okay, or maybe one or the other, or something in between. That's also fine. And then for those of you that never sold an IUL before, right, you're also going to understand enough to be dangerous by the time we're done, okay? But let's take, we have over 24,000 agents, right, and we'll pick somewhere in between, and we'll say, okay, right, we have permanent products, right, that maybe you have an appointment tonight, maybe a Zoom call when we're done here. we're looking at obviously IUL, right? The new universal life and whole life, right? And when you think whole life, you think typically mutual companies, you think guarantees. And what happens is, and what we did on this stat in front of you, right? And we pulled this up, by the way, by leveraging AI, right? You could do the same thing, and you should be using this in your marketing. Especially, we have that new AI marketing platform that's available, that will be available by our expo. We're working on it now with pilot agents. But the point is, right, take advantage of the latest technology. That's exactly what we do on these weekly calls, right? We didn't just sit down with a calculator and come up with this the last week. No, right? It's all available to you at no charge. So, anyway, left hand side is whole life, right hand side is IUL. These are the latest stats based on 2025, our last full year, right? And what you're going to notice here in a nutshell is IUL is catching up, right, to the old dinosaur, the old guaranteed whole life. So not only is it catching up, but it's the new trend in the industry. And what I love, and by the way, I'm not bashing, one or the other, right, or tooting the right side, tooting the horn here. No, right? For every client, every prospect, depending on their situation, right, you might have a different option, a different product, different goals for that particular person. So what I always think about is, and let's look at the right side for a second, IUL, the younger professional, right? That if you're looking at apples to apples, whole life versus IUL, the younger professional, what you're going to find, the IUL is typically less expensive, right? We know there's more flexibility with IUL, right? IUL was born from Universal Life, from UL back in the 80s and 90s. Okay, so IUL less expensive, a lot more to gain on the upside, especially around the retirement ages, right? If there's a premium that's missed, right? Flexibility, that's what comes to mind. Sure, take it from the cash value and take care of the premium, no problem. With whole life, little different scenario. So, what a huge part of this whole chart in front of you is, if we go to the next slide here, here's what I absolutely love, right? When we're thinking about IUL versus whole life. Just a couple bullets here. We're going to move down to number 2, 3, and 4. So what I think is most astonishing to me is if we look at returns, right? And this is on the average over a 30-year period. This is number 2 down, whole life, 4% average return. Okay, 1.2 million of cash value by retirement age of 65. Let's scroll down one bullet to IUL. We're looking at almost double, 7% average return, $2.5 million cash value by age 65, okay, with a product that typically costs less money. Okay, that to me is a slam dunk every single time. Okay, I love that aspect. So let's move down now to number 3, right? Let's look at the downside. The old zero is your hero. Okay, so another great plus on the IUL side is, typically, yes, zero is your hero. You can even find products that have a 1% floor or even higher floor. Okay, which means if things hit the bottom, if there's a crash, right? If there's the whole world turns upside down, you're still getting a positive return guaranteed per the policy contract. Okay, that's a huge plus. Let's move down to number 4 real quick. And then, by the way, I'm going to have Eric take over in a couple of minutes because he also wants to share some great facts and points here on today's conversation. But what I love about number 4, right? Let's look at average cash accumulation. So when we talk about retirement income, right? We're maybe younger professionals, okay? And let's look at whole life retirement income at age 65, retirement age $54,803 tax free. Average IUL retirement income age 100, almost $131,000. That's about $81,000 of an increase when you're looking at whole life versus IUL at retirement age. Now, take all of this into consideration. Think about commissions, compensation, okay, on the average. Now, remember, we love whole life, we love IUL. It depends on the particular consumer, the prospect, okay, and their age, their health, what their goals are, okay? But when you look at the big picture and you're trying to make the right or left turn, you need to take all of these things into consideration when presenting, okay? But commissions, you're talking about to you, the agent, typically about a 20% commission difference, okay? 20% higher on the IUL side. Another great point here, underwriting. Okay, now we know, yes, we have a handful of the top whole life carriers and products. Okay, and there's nothing you can say that's wrong with them. Okay, for every situation, right? We spoke about that. When you look at IUL, number one, yes, we have the number one rated carrier on today with us. Okay, period. They were number one for us, number one for the industry when it comes when it comes to IUL. Okay, so but think about this for a second. Okay, handful of whole life companies. We got a ton of great products on the IUL side, right? Lots and lots of options. Think about underwriting. Okay, now on the whole life side, you're never going to see like an underwriting fire sale where your consumer falls into a standard risk class. Okay, but one of these old school, I don't want to bring up names, but one of these old school whole life companies says, Bill, you know what? We're having a kind of an underwriting fire sale. We're going to bump you up to preferred best. It's not happening. Okay, in fact, even if the client's 3 pounds over the weight chart, typically you're still going to get that standard health class no matter what, right? Because, well, I don't want to dive into it further, but we all get it. On the IUL side, what you're going to notice, especially with Allianz, right? They have this underwriting rate up program. Okay, what does it mean? So after putting everything aside, comparing apples to apples when it comes to premium, right? Because the IUL costs a little bit less than whole life. Commissions, you're going to make a little more with IUL versus whole life. Now, think about this for a second. Your client comes in at standard, right, with an old school whole life company, let's say. Now, let's say with Allianz, for example, they come in at standard. Guess what? They're getting preferred best, just like that. Boom. And I think that program is running until the end of this month, till the 31st, and might be extended. I heard from maybe it's a rumor, maybe not, but anyway, you have this program until the 31st of this month. Okay. Now, even with tobacco users, okay, standard to preferred tobacco, okay, non tobacco, standard to preferred best. You're not going to find that on the other side. So when you're comparing, let's say, a whole life to IUL this evening, right, using one of our carriers on both sides, take that into consideration because you talk about a premium difference. Okay, we're not talking 5, 10%. This could be 20, 30, 40% in some cases less premium. Okay, so look at the big picture. Our marketers are here to help you, right, on both sides, and then you make the decision with the client. So, right, either way, we win, you win. I get it, but I just want you to know the facts today. That's what this is about. And for some cases, what you're going to find is the client's more conservative. They want the guarantees. The whole life works, and that's totally fine with us as well. Okay, so just know that. Let's jump in here to my first slide, and then Eric is going to take the wheel. So real fast. Also, what we're going to do is when Eric is done speaking today, we have, like I said, our giveaway. We picked out some great performing social media posts that focus on IUL, and we're also going to show you the ultimate $99 legacy program, right? By, let's say, a breadwinner, mother or father, ensuring, let's say, their 1-year-old child with an IUL, right? Showing what $99 can build up to in 20 or 21 years, and how literally there's a 3 to 4 times return and a free scholarship that just comes along the way. So I'll show you that sales strategy when Eric is done. Anyway, these are our agent testimonials, and this means the world to us. So I'll shift gears for a second and just number one, try, and I don't care where you're coming in from, but try to be at our expo on April 17th. We'd love to personally thank each and every one of you, right, for making our year, right, for making our decade, right? Here we are over 52 years, not only going strong, but having a record year on the life, health, and annuity side. So there's so much to learn, and I hope we get to, like I said, see you, shake your hand at the Expo live in South Florida on the 17th of April. But I want to thank all of you for sharing, Patricia, Claudia, Lewis at FISG, Tom, and Chandra. That means everything, not just to me, not just to our carrier VPs, to our staff, our employees, our families. So please keep sharing. We love to see this stuff on our Facebook page, on our Google reviews link. Okay, let's move into our feature presentation. The reason why we're all here today is to listen to our VP from Allianz, Mr. Eric Johnson, is joining us. Eric, are you there, buddy?
I'm here. Can you hear me?
Yeah, loud and clear.
Hopefully you guys can see my screen now.
Yep, perfect.
Awesome. All right, well, I'll get into it. Thank you, Bill. Thank you, Levinson, for having me, and thank you, everybody, for joining. This is fantastic. As Bill kind of mentioned, it's a really hot time in the IUL space, guys. Allianz is coming off of 6 straight quarters of record sales, and we actually had our best year ever in 2025. And I'll say this, and that is just with our one IUL product. So on the life side, guys, Allianz just has one IUL product, and we are breaking records last 6 straight months, and then 2025 was our best year ever. So now is the time, I would say, to really be having those conversations with your clients and bringing unique strategies when it comes to differentiating yourself from the next guy or girl, right? And so today, guys, what we're going to do, we're going to get into our product. We're going to go over a couple of different things, right? Like Bill mentioned, I know, we're going to look at that whole life versus that IUL. I'm going to, I'll have some real examples. I will actually get into what I'm seeing come across the desk. I'll talk about some 1035 exchanges that I was, at the forefront and kind of literally reviewed, this carrier versus ours and why they ended up actually making that 1035 exchange. I'll talk about, some of the things that we're seeing, how it's being presented, right? We're seeing a lot of people in that small business space now are starting to utilize our product. 529 plans. So when it comes to that college funding, a lot more people now are starting to say, hey, 529s are great, but they're actually looking at an IUL and funding it that way. And that way they're just bringing new ideas to their clients. They're going, wow, this guy's not just a 529 salesman. He's actually bringing me different ideas. And then when they talk to their friends, all of a sudden they go, I need to talk to you. I need someone that's bringing new, fresh ideas. So looking at this agenda, guys, I'll touch on just our company strength. It's good to know who is Allianz, who are we, right? You want to know kind of who you're buying from. You want to have that confidence, right? When your clients are placing premiums in a product, you want to know that company is going to be there 10, 20, 30, 50 years down the road. Loan flexibility, I'm going to spend some time here because this is a key differentiator, right? This product is designed to have money pulled out of it. And there are other permanent products out there where that's not, they say, yeah, it's great for doing that, but when you really get under the hood, it's really not. And that's a key differentiator with Allianz is that loan flexibility. How do you actually access that cash value is extremely important, and Allianz is one of the best at it. We'll talk about some of the indexing innovation, guys. We got some really cool things. The index bonuses, I know that Bill kind of mentioned some of those things. Index lock, that's a game-changing feature. And then we'll look at some digital tools. But before we get into that, Bill did touch on this, and Bill is 100% correct. We do have a risk class upgrade program that is ending at the end of this month. And like Bill said, guys, it's actually a table 2 or better. You will get preferred best. So you have a client that likes to not work out, Netflix and eat Doritos and all that, and they got high cholesterol, they could be preferred best. And that is a game-changing deal because when you sit down with your clients and tell them they are the healthiest they're ever going to be, they want to sign on that dotted line. They'll almost be surprised that you say that because they may go, I thought I was a standard, maybe a table rated. You're telling me I'm preferred best. Where do I sign? Let's take advantage of it. And yes, if they are a standard or table 2 tobacco user, that actually gets upgraded to preferred tobacco. And that is on any case. So we're talking 100,000 death benefit, that's a minimum, all the way up to 65 million. They are automatically eligible for this program. And so we're seeing a lot of agents now saying like, yeah, I don't do a ton of the IUL. I maybe focus on VUL or whole life, but what they're doing is saying, but if I can get my client a preferred best rating, I'm going to save them on COI charges. right? More money built up in that cash value and an easy way to pull it out. They're starting to now send an application to Allianz as well as their other carrier. And a lot now we're seeing people coming more and more to us because they're saying, I'm getting preferred best, where my other carrier got a standard. And it's a no-brainer. And so that's the end of this month, guys. That will go away. And here's what I'll say. If they get an app in, or you guys get an app in March 30th or March 31st, they have 6 months from that date to place that in force, and they'll be eligible for this program. So come right April, May, June, July, they're still eligible for this as long as that app is in-house by the end of March 31st. I think it's by 3 p.m. Central Time. So now is the time, guys, have those conversations, right? If you have a client that's like, yeah, I'm thinking about it, just say, hey, let's get the app in because you might be able to be eligible for this risk class upgrade. And so we're seeing more and more people start to just throw those apps in knowing, hey, we want to take advantage of this program before it goes away. Now, Bill mentioned it might be coming back. Yeah, that's true. I don't know when. I hope it does because it's a fantastic program. But I would say now is the time to really deep into those conversations and just say, hey, it makes a lot of sense. Let's at least go through the underwriting process and get it in now because we could take advantage of some COI savings. Any questions on that, reach out to Andrew or Bill. Obviously, Bill will take care of it. But yeah, end of the month, guys, get it in. Now is the time. It's just a free upgrade, right? Table 2 or better, automatically you should have preferred best. It's fantastic. I mean, we're seeing, policies of $50 million death benefits come in, trying to take advantage of this program, knowing they're going to save their clients a whole lot of money just by getting this application in. So let's get into the IUL. A lot of you are probably familiar with it. For those that are not, this is just kind of a quick overview. What is it? I love this slide because it kind of points to, hey, it's not just that thing you see on the top left where it's death benefit protection. That is actually, when it comes to presenting this, I've seen this presented in a way where that's actually one of the last things that people actually end up talking about. They're talking about the other things you see there: accumulation potential, living advantages, right? Chronic illness rider, terminal illness rider. We have a term rider built inside this product to see even more on those COI charges, because we want this thing to build up cash and you want you to pull it out the most efficient way possible. And then tax advantages. Here's the other thing I'll say. I know Bill mentioned, we call them Henrys, the high earners, not rich yet. More and more of those types of clients that are starting to climb, the ladder professionally are looking at this product and saying, hey, this makes a ton of sense, but I can't afford to take out a $10 million permanent policy. Great. Take out $1 million of permanent and then sprinkle on $9 million of term, or do 100,000 of permanent and sprinkle on 900,000 of term. And then as they start to climb, they can convert that over the next 12 years from term to permanent. And we're seeing that strategy utilized a lot because a lot of the young professionals are starting to understand what this thing can really do. It is not just a, hey, protect your loved ones. It's, hey, I can actually utilize this. This is another lever that I can pull on as I climb and as I age, right? I've seen this thing utilized, guys, in ways I can't even, it's incredible. People are putting this up as collateral in loans to get better interest rates, borrowing against it to pay for college funding, borrowing against it to pay for house improvements, all types of things just with this one product. And at the end of the day, there is that top left piece that you see there. There is death benefit protection. You are still checking that box and making sure your loved ones are taken care of. Let's talk about company strength. I won't spend a ton of time here, but it's good to know, who are you doing business with? I see a lot of carriers out there that are pumping their target premiums and this and that. And then you look at kind of their ratings and you go, are they going to be around in 20 years? I don't know. Now, I don't know about you. I don't want to flip a coin with my client's money knowing, hey, this company looks really great on paper, but they might be out of business in 10 years. That's not what you want. You want a company like an Allianz with that Comdex score. I would highly recommend, if you guys are doing permanent insurance with other carriers, just make sure you look at that Comdex score. That is extremely important. And ours is, one of the best out there. I would say anything below a 90, guys, is kind of a red flag. So really make sure you're understanding, who are you doing business with? And obviously, you guys, you want to do business with someone that's great. That's why you're with Levinson, right? And so Allianz, they're one of the best when it comes to our ratings, and we take a lot of pride in that. Now, this is a key differentiator, guys, when it comes to why we can do with a lot of the things that I'm about to talk about, is this right here. A lot of other carriers out there do not use this dynamic hedging, right? They actually have a third party, Merrill Lynch, Morgan Stanley, Wells Fargo, whoever it may be, that is buying and selling and trading their options for them. Costs a lot of money, and it limits what you can do, right? By having this, guys, we are not talking, we need to wait till the third Friday of the month to do our sweeps, right? We can't wait till, hey, you got to wait till the end of the month before we can sell any options. It is daily. And not only do we do it on the life side, we do it on our annuity side. It's all in-house. And so we're talking about billions of dollars being transacted every single day. And that allows the clients, that allows you to be able to say, hey, I want to lock this in, or hey, I want to sell this option today, and it's done like that. We have saved over $2 billion with a B dollars by having this strategy implemented. That is allowing us to create things that now other carriers are trying to do. And I'm going to touch on that. So it is extremely important you guys understand, hey, why can they do what they do? It's because of this right here. We do all the hedging here in-house. We do it for our life side and the annuity side. So we're doing it in crazy big volumes, which helps us with pricing. It helps us be able to do unique things like a rate lock feature that I'm going to touch on here in a little bit. Now, with whole life or other types of products, a lot of what you hear are these guarantees, guarantees, guarantees. Number one, you pay for guarantees, 100%. Allianz is not known for guarantees. That's not something that we really kind of push home because we are so focused on, hey, we want to build something that, you know, builds up cash, but then you can pull it out the most efficient way possible. But within that, guys, we do have a few guarantees within a quote non-guaranteed product, which is pretty cool. Bill mentioned this guaranteed floor of 0%. On this product, guys, you have a guaranteed floor of 0%. Now we actually have another index option that has a guaranteed floor of 1%. So we have two different options. You have a 0% floor or a positive 1% floor. We have three different bonus opportunities within this product, guaranteed. We have this index lock feature that I'm going to touch on that is guaranteed to be there for the life of the product. This fourth one, guys, is extremely important. With interest rates doing what they're doing, they're up, they're down, they're left, they're right. You have a guaranteed rate for the life of the contract. If interest rates go to 20%, this product, you are at a 5%. Rates are still, you can't even go out and get a mortgage at 5%. Within this product, that is guaranteed for the life of the contract. You can borrow money at a 5% rate. That is incredible. That is powerful. That is that quote, quote, be your own banker strategy right there. You can make positive arbitrage on this. You can lock this loan rate. There are so many different things you can do, but you know, no matter what happens with the economy, like Bill kind of mentioned, right? We can go through Armageddon, right? World War III, all these different things. I mean, there's already so much going on. You have a guaranteed 5% rate for the life of this policy. That gives you a lot of confidence. And when people go to borrow against us, that gives them a lot of confidence knowing, hey, my rate's not all of a sudden next year going to go to 8%. I'm at 5% for the life of this contract. That is amazing. And you have that ability to allocate between all the different options that we have, which, like I said, I'm going to touch on just the indexing strategies that we have here in a second. But so we have 5, guarantees in a quote non-guaranteed product, which is pretty cool. This gives a lot of people confidence knowing they have these things built into this policy and they're not going away, right? We're not going to go into 2028, all of a sudden rates have skyrocketed, all of a sudden, oh man, I thought I could borrow at 5. No, you can borrow at 8 now. If you read your contract, it says, hey, it's right now set at 5, but our guaranteed rate's 8. This is guaranteed at 5 forever. Now going into the whole, different permanent products out there, right? One of the biggest thing, guys, and Bill kind of hit on this too, which I completely agree with. There's a lot of great permanent products out there. I'm not going to bash a VUL. I'm not going to bash a whole life. Like Bill said, they absolutely are a fit for certain clients, 100%. I could not agree more with that. It really comes down to having the conversation and understanding what is the client trying to create? What are they trying to do with this? And depending on the answer, it might not be, hey, IUL might not be the answer. But what we're seeing is more and more people saying, I want to create another lever for retirement. I want to create something for a legacy. I want to be able to access money tax-free at different points in my life. I want to be able to be flexible with premiums. Like if I get a big bonus, I want to put in a little more money into this thing. Or hey, if I'm having a tough year, I want to make sure I can kind of push, scale back a little bit. Then it becomes, hey, we have a great fit for you, and that is the Allianz IUL. If someone comes to you and says, hey, I just want to guarantee, I want to make 10 premium payments and just have, guaranteed death benefit, nothing else, the IUL is not their thing. If they say I want to minimally fund something, might not be the best option. But when it comes to our IUL product, and I mentioned this, the biggest thing, guys, is how do you pull money out? When someone says, I want a permanent product because I want to access the money at different stages in life, this is what you need to spend time on, because this is how they access the money. Allianz has two different loan structures. Okay, and I think you saw in the previous slide too, guys, you can change between these two structures every single year. You do not have to, when the policy goes in force, tell us, are you going to do a fixed loan or an index loan when you decide to take out money? When the time comes, whenever that is, 5 years, 10 years, 15, 20 years down the road, you and your client can decide, hey, which loan strategy do you want to take out? Do you want a fixed loan or do you want an index loan? Well, I don't know. Well, guess what? You can do a percentage of each. You can do a 50-50 split, 70-30, whatever you want, you literally can do. Now I'm going to touch on both of them here. The fixed loan, we're going to charge you 2.91% in the first 10 years, and we're going to credit 2% on that money. So it's essentially a 1% loan. But 2.91%, guys, that's incredible. A lot of times we see this fixed loan taken out when people say, hey, I need to take out some money, I got to pay off maybe XYZ, or hey, I got an investment opportunity that's going to make me 8%. I wanted, positive arbitrage, but I'm going to pay it back. Perfect. Let's look at taking out the smaller interest rate. Your arbitrage is kind of fixed, right? First 10 years, it's actually a 1% net loan charge. Years 11 on, you're essentially at a wash loan. And a lot of times people do this when they say, I'm going to pay back in X amount of time, because they're getting charged such little amount in interest. Now, if you other times, some people might say, hey, I have a great investment opportunity, it's going to pay me 10%. I want to actually get into this 5% loan because I know I can actually index this and make potentially positive arbitrage higher than 5%. Maybe they want to put this into a lockable, right, index that we offer. Maybe that does 8, 9, 10, 12%. They just made X amount on borrowed money. Very, very powerful. And that 5% is not going to change. It's not going to 8. Won't drop to 4, but it's not going to go to 8, 9, 10, 11, 12%. Other carriers out there, guys, it's really important to look at what are the guaranteed loan charges. A lot of them might illustrate at a 5 or a 4, but when you actually look at what is the guaranteed interest rate, it says 8. And that is extremely important to know, because if you're illustrating at a 5, and then fast forward 30 years and interest rates have creeped up, and now that 5% loan charge that you illustrate is actually an 8% loan charge, that changes how much money is actually coming out and going into your client's hands. Knowing you have a guaranteed 5% is extremely important, because it's not going to change. What's illustrated roughly will be there. That's a lot of confidence. And I mentioned you can do a split between the two, absolutely. And every single year you can change. If they say, hey, I'm going to pay this back, maybe they go to the fixed loan, and then 2 years down the road, they go, you know what, I don't think I'm going to pay it back. Great, let's go into an index loan and see if we can make some positive arbitrage on this thing. And the nice thing too, guys, which I haven't touched on yet, is this borrowed money is lockable. So you can actually somewhat dictate when you lock in profits. When you get to a certain level of like positive arbitrage and you still got a couple months till the end of your anniversary, you can actually lock that in and secure positive arbitrage on borrowed money. So the main thing here, guys, is flexibility. You and your clients have the control. You decide how to pull money out. You are the ones making the decisions. It is not a, hey, here's the loan terms, you got to do it. Thank you for buying a policy. No, it is you and your client making those decisions together and figuring out what is the best strategy. And every year you have the ability to change it. Now, index innovation, guys, this to me is extremely important. And Bill kind of mentioned this. When you look at other permanent products out there, there's a funny saying I heard where, quote, a whole life is kind of like a rotary phone, and the IUL is more of like an iPhone. And that to me, that is very true, right? There's a lot of really cool, unique things you can do within the IUL chassis that are not offered with other permanent products. And that's just because they were not designed that way. And so Allianz has really kind of been at the forefront of innovation. And we've seen a lot of other carriers start to implement things that Allianz introduced. And it's really cool. It kind of reminds me a little bit, of Apple, and how, you look at a smartphone nowadays and they all look like iPhones, right? And you're an Android guy, hey, no shame in an Android at all. But Allianz has really changed the game, I would say. If you look at this, the one I really like to look at is look at 2019, the index lock. That has been an absolute game-changing feature that other carriers are trying to replicate, but they can't because of that. Goes back to that dynamic hedging, right? They don't have that, so they can't just sell those options instantly when a client says, hey, I'm at a 10% rate of return, lock it in. And then in 2024, guys, this one has been an absolute game changer as well. We actually have a uncapped S&P 500 index, and we're seeing more and more premium starting to go into that index, because when you talk about the S&P, your clients absolutely understand what is the S&P, and now they say I can go into an S&P index that's lockable, that's uncapped. Why would I not? Now, Bill mentioned, we have about the IUL space, there's roughly about a 7% rate of return on average, and that's roughly pretty true. Here is what Allianz has done over the course, since 2006, where average rate of return is about 6.3%. And that fixed number looks pretty low. We went through obviously some periods of low interest rates, but I can tell you right now, our current fixed account is at 5.5%. And so it's a very strong fixed account right now. And then the average rate of return, 6.32%, that's really wrong, especially when you're seeing illustrations run at about 6%. Knowing, hey, if you look, obviously history is not going to dictate the future, but it definitely is a good glimpse at what things have done in the past, right? It shows you exactly how things have performed, and knowing Allianz is right about 6.32%, that gives clients a lot of confidence knowing, hey, how likely is this illustration going to do what you're showing me? So just remember 6.32%, because we're going to kind of circle back to this here in a couple slides. Now, I mentioned the index options, bonus opportunities, right? Kind of the different chassis within this IUL. Don't want to spend a ton of time. I know it's a lot of words here, guys, but Allianz really simplified the choices within the clients. We used to have like 14 different indexes and all these different things, and clients were just going like, what am I doing? Help me out here. And Allianz like, we just need to simplify this thing, keep it, simple, but then we want to get just the best indexes available. So they have two different volatility controlled indexes that goes between bonds, equities, and cash, just based on volatility. You have a blended index, which is just a nice 60-40 split. Then you got the two S&Ps, right? We have an S&P index that's just a cap at 12.5%, I believe is right now. And then we have an S&P 500 futures that is that uncapped with the rate lock. Plus, obviously, we have that fixed account. And then within this, guys, you have, all these different ways of actually tracking how they perform. You got the annual point-to-point, monthly sum, and you got the trigger. And I don't want to spend a ton of time on this at all. And, if you have questions and want to dive deeper into the actual crediting methods, reach out to Bill, reach out to Andrew, right? Reach out to Levinson. They can kind of walk you through how these things work. I just want to show you guys, it's not just a typical annual point-to-point. There are other ways and other options out there within these indexes. But here essentially is the lineup. This is what it looks like. And one thing I want to note with this slide, guys, is about that fifth item down there on the left, lockable. You see a lot of it says yes. The only one that's not is our S&P with a cap. Lockable, when we get into this, we're almost there. That feature, guys, is giving you and your clients control. And it is I have seen clients so excited when they can lock in an index at a 12 or a 15 or an 18. And it's a really cool phone call for you as the advisor to make to your clients and ask them if they want to lock in X amount of profit. It's a really cool deal. So I'm going to get into this lockable thing, but I just want you to see one of the main things with Allianz, it's flexibility. It's also lockability. When you think of Allianz, I want you to think lockability. I want you to think having that control so that volatility doesn't really become a factor in annual and just your performance overall. So what is right for what? Right, so we offer 3 different, I would say, bonus opportunities or multipliers. And the classic, looking at these 4 here, guys, the classic is that positive 1% floor. I mentioned that 0 is your floor. You also have the option of a positive 1% floor. Right, and this is more of that client that says, hey, I just want to know no matter what happens, I'm actually going to get a positive rate of return. No matter what happens, I'm going to get a positive return on this policy. Great. Allianz has a classic, you have a 1% floor. Then you have the other 2 options that are a little more aggressive, that if someone thinks, hey, I think this thing can do 6 or better, I mean, obviously Allianz is at 6.32% as their average rate of returns, and so 6. They have a bonus opportunity to actually multiply that rate of return by 15%. So if they get a 10% rate of return, you multiply that by 1.15, they actually got 11.5%. It's powerful. And that's guaranteed to be there for the life of the contract. So any positive rate of return, you multiply that by 1.15. With the classic, that 1% floor, any positive rate of return, you would just add 1% to it. So if they get a 7% rate of return, you actually add the 1, you get an 8. And that's guaranteed to be there. The select is the more aggressive. And I'll say this, when you're looking at illustrations and doing side-by-side comparisons, it's really important to look at what index are the other carriers running. Are they showing multipliers of 80? I've seen multipliers of 200%. And it's great, illustrates amazingly, right? You get a 6% rate of return, you double it, looks pretty good. What is the asset charge associated with it? I've actually seen a couple carriers in a little bit of heat because the clients didn't understand or weren't told what is the asset charge associated with going into this index, which having that high multiplier. Really important to know that. Because why? Well, if you have a 5 or a 6 or a 7% asset charge on top of the other fees within a life insurance product, and you get a couple of zeros in a row, that's not good. Allianz offers a 40% multiplier with a 1% asset charge. Essentially what you guys probably charge in AUM fees. 1%, simple. And here's the nice thing, guys. When you look at this slide here, you got all these different options, right? You got the standard, the classic, the bonus, select. Just like the loans, you can do a percentage into each one of these. You can say, hey, my client really likes this classic. They want to do 50% in that, knowing they're going to get a 1% on X amount of money no matter what. Great. And then they say, you know what, but they also like this select where they can get kind of some nice upside if the market kind of does well. Perfect. They do a 50-50 split between the select and the classic. And guess what? The following year, you sit down, you do your annual review, you can change into any of these on the screen. It's all about flexibility, control that you and your client have. Now let's get into one of the awesome things, right? This index lock, I've been talking about a lot. What the heck is this thing, Eric? How does it work? What is this feature? So in 2019, Allianz rolled this out where essentially your client at any point in time during their crediting period, right, annual point to point, any point in time from X to X, they can lock in their profits. So for example, you have a client, policy goes in force today. 6 months from now, they log online or you get an email or whatever it may be, and they're at a 12% rate of return. That's fantastic, right? 6 months in, 12%, you illustrated 6, you're ahead of the game. You still got another 6 months to go until that crediting period is over. Typical IUL or typical VUL, whatever it may be, you got to wait those 6 months and hope and pray that index stays up there, continues to rise, or only maybe drops down to like a 10. With this rate lock feature, guys, you have that power now to say, hey, we got 6 months till the anniversary. We're kind of worried about what someone might say out there. Well, we might go to war. You don't know what's going to happen. I think the market's there down 1,200 points. They can lock in that 12% rate of return and not worry about the next 6 months. Think about that. They're up 12%. They have 6 months still till their anniversary. A lot can happen. They can capture that 12% and not worry about the next 6 months. I wish I had this on a 401k or a brokerage account or an IRA. Knowing I can capture profits each and every year, that is amazing. And now we have an auto lock feature. So instead of your clients having to be like, hey, I got to track it, I want to check it, you can actually say, hey, you tell me a number that you like, or if that index got there, boom, it will just automatically lock for you. We see a lot of people do this. They do a 10 or a 12 or a 15. If that index gets there, they don't have to do anything. Boom, it just automatically locks in for them. Very powerful. And we have that available, guys, on the upper and the lower threshold. What I mean by the lower threshold is as that index continues to rise, you can actually essentially raise your floor. So it gets to a 12, you can say, hey, I'm gonna have a lower target of 6, knowing no matter what happens, 6% is the lowest rate of return you're gonna get for the year. It's almost like you can chase up gains and almost like you're putting in a stop loss. Very powerful. Now I mentioned our average rate of return of our in-force block of business since 2006 as a 6.32% rate of return. We rolled out this index lock feature in 2019. Over 40,000 policies have locked at an average rate of return of 9.5%. Now, Bill mentioned a stat that said the IUL average rate of return is 7%. I'm telling you, since 2019 on 40,000 policies, the average rate of return is 9.5. Real locked profits in your client's hands. The highest locked in rate we've ever seen happened last year at a 37% rate of return. Because these are uncapped indexes, guys. So when you think about that, 37% rate of return, and it's not getting capped out at 12, they are seeing that full 37% rate of return. That is powerful. That gives clients confidence. That gives these policies the ability, if you get a 0, you're okay, or a +1. I mean, look at this, 9.5% rate of return. You got people locking in at 18, 19, 20. I mean, those are real profits. Those are real gains. And this happens every single year, guys, that you can take advantage of this feature. It's not just a one and done. And I mentioned that we have, those different indexes, and you can go into, 25% into each one or whatever it may be. You can lock them in separately. So if you have 2 indexes that have the rate lock, you can lock in one, capture the profits, and let the other one run. You don't have to just hit lock and then it automatically just locks them all in. You can pick and choose which ones to lock and win. Extremely powerful. There's no extra fee to be in these indexes, because as you guys saw when I showed that slide that said lockable, yes, 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 that's what Allianz is. That is the name of the game, lockability. And it's very powerful, as you can see here by the stats, right? Our average in force since 06, 6.3%. Average locked in is 9.5 on 40,000 policies. And that's real profits in your client's hands. Couple quick rules, right? People like to know, tell me about this. What can and I cannot do? Essentially, if you go in and lock it, you can unlock it same day before market close, right? So if you go in, you lock it at 10 a.m., but you go, hey, I think, rates are dropping, the market's going to skyrocket the next week, cancel it. Let it run and then lock it in a couple of days down the road. But this feature, guys, I can't stress it enough. It's giving your clients that power. Right, and that we send out emails to Levinson saying like, hey, you have XYZ clients that are at or above 7%. It might be a great phone call to make and see if they want to take advantage of this feature. Or when you sit down for your annual review, you say, hey, tell me about a auto lock number you'd like to see us just input, and if it gets there, I'll lock in for you. It's just great conversations to have, and knowing you just have this feature. Because I'll tell you what, 2018 is a great example of when this feature would have been amazing, right? Markets went up straight up, Q1, Q2, Q3, right? People were at 10, 12, 14, hitting caps. Everyone was just like, this is incredible. It's been a great year. And then Q4 is coming. It's going to be a Santa Claus rally. It's just going to be incredible. And the market nosedived. People getting 10s and 12s actually are getting 2s and 3s. And so having that lockable feature, you would not have had that pain. And it's just a great way for you to stay involved with the client, stay involved with the policy, and for them to have fun and knowing like I can lock in profits. That's incredible. Lastly, guys, I want to just touch on some digital tools. I know, especially Levinson, they are incredible at this type of stuff when it comes to the digital and all that. They are, I would say, probably at the forefront. Allianz is kind of playing catch up, and we're just kind of, I think we're copying some of Levinson stuff and watching what they're doing, and we're like I said, we're playing catch up. But we do have a couple really cool digital tools that we're really starting to utilize. And this, I would say, guys, if you are interested in this type of stuff and right, diving deeper into the product, reach out to Bill, reach out to Andrew, reach out to Levinson. They are incredible. They can speak this product almost better than I can. It's pretty cool. But Allianz has really invested, I would say, last year and going into this year into this type of stuff, of making this digital experience a whole lot better for you and your clients. And a lot of these right here that you see here, these sales tools, are kind of game-changing features. The one like this allocation insight tool on the left side there. It inputs, you tell them, hey, let's look at the S&P index in a bear market. Let's look at these indexes in a flat market, and it'll tell you, or you say, hey, I think the markets are going to be flat. Okay, I do think that. Here are the best indexes. And so it's just a great way to have that conversation with your clients, and you ask them how they feel about the markets, and this tool will kind of spit out based on what your clients just said. These will be the best allocation options for this year. The insight tool is incredible. That really breaks into more of a visual concept of getting into the charges within the IUL and really breaking it down and showing like how everything is working and showing it on a chart of, because one of the big things is all the charges. And when you actually look at the life of an IUL policy and break into the charges are extremely low. And this insight tool really gets into that and shows you, hey, over the next 20 years, here's actually what you're paying per year in charges. And a lot of people like this, like it says here, you can brand it, it's customizable to policies and proposals. So reach out to Levinson, they can get you set up with this. They can do webinars with this, run examples with this, right? It's a really powerful tool that more and more people now are starting to say, hey, instead of just presenting a basic illustration, they go into this tool and really breaking down, hey, how does an IUL compare to your brokerage account? And doing these side-by-side comparisons or other permanent products. It's really, really powerful. Then obviously the backcasting too of just going in and showing obviously your historicals and that type of stuff. And then different things we're offering to the clients, guys. Apply now, right? All digital, e-signatures, My Policy Pro. They're making it really interactive technology-wise for existing policies that are enforced for clients to be able to go in. They can pull up the illustration that was sold to them and compare it to the actual performance, which is really cool because people like to know like, hey, I was showing 6, how am I actually doing? Hopefully it's better, right? Hopefully it's doing better than what was sold to me and that type of stuff. You can manage premium payments now. We got the EPHI. You don't have to make a phone call. You can do it on your couch, watching a TV show, whatever it may be. And they're really just investing, guys, in this digital capability. They're just making everything a whole lot easier for you and your clients. And that's really important. Like I said, I think Levinson's one of the best at digital capabilities and incorporating that into their practice. We're all just kind of playing catch up, right? But Allianz has really made that investment in making things just simplified. So it's not just, there's no more paper anymore and that type of stuff where your clients, the ease of doing business with Allianz is getting a lot easier. And they've really made that investment to make it so your clients aren't, frustrated and they're able to just do things and get things done a whole lot faster. So with that, guys, I want to just say thank you. Wrapping up, I just, the name of the game within our product, number one, it's just the only product we have on the life side. Makes my job a whole lot easier. But when it's the only thing you do, you better do it the best. And Allianz really does, right? I mean, I mentioned, we had our best year ever in 2025, 6 straight quarters of record sales. It's because of all those things you just saw, right? We have a rate lock feature. You have the flexibility, you have the control of changing allocations, changing loans. You have the control to dictate how this thing essentially, obviously without obviously making the markets go up or down, but you get to control how you deploy your money and how you access the money every single year. I mean, that is a powerful thing, and you can lock in profits as you see fit throughout the year. And that's what I want you to take home is Allianz. It's flexibility, it's control, and it's lockability. I mean, truly, at the end of the day, that is what makes our product what it is. And that's why more and more people are starting to utilize it for college funding, small business, right? Golden handcuffs, those types of things. Pre-retirees, we're seeing all of a sudden start to utilize these things. It is being utilized in so many different ways. It is just incredible. And that is why we are seeing record sales, because more and more people are starting to understand this concept and get it and being like, AUM is great, but there are other things we can do for our clients. Give them other levers to pull on, or all of a sudden you become a game changer for your clients. And then they want to tell their friends and neighbors, and all of a sudden you getting referrals without even them trying to give you referrals, because they're just happy and excited about what you just did for them just with this one product. So it's a great time, guys. Have those conversations. That risk class upgrade going away at the end of the month. Have that conversation with your clients and just present the idea. I've seen more and more. I'll end with this. I personally saw a 1035 exchange for my whole life into an IUL, where the client's whole thing was, I want to pull out money the most efficient way possible. I want to save some money on premiums. And I want to keep my death benefit where it is. So we 1035'd it into the IUL, saved them $30,000 a year, didn't change their death benefit. And so far, I've seen it utilized for loans at rates that he was paying 8% on, now he was paying 5%. And he is so ecstatic by that. We saved him $30,000 a year premiums, kept the death benefit, and he's accessing money at 3% less than he was. When you're pulling out 100 grand or 200 grand or 500 grand, saving 3% a year is a big deal. And so we're just seeing more and more of those types of things. And more clients, guys, are starting to be like, I've had this whole life policy for 25 years. I actually want to access the money. There's a better thing out there. And so we're seeing more and more clients starting to come and utilize this old whole life. They want to 1035 them into a IUL, especially with this risk class upgrade. So it's a great time to really have those conversations, guys. With that, I know I'm taking up too much time, Bill. I do apologize. I will wrap that up and say thank you so much, guys. I'm going to hand it back to Bill.
That was great. By the way, Eric will be at our expo if you want to see him live on April 17th. Shake his hand, listen to his great presentation. And 2 points I just want to make here, and then I have about 5 minutes of slides, and we'll get everybody out. Two things. Number one, just think about this, that earlier slide that I spoke about, the industry current rate of return on the average of 7% versus Allianz, 9.5%. Priceless. Okay. And then the second piece here was I spoke about the rate improvement program that Allianz has until the 31st. I didn't realize it was table two to preferred best. Right here I am talking about standard to preferred best, which is still great, but table two to preferred best. Okay. That's three classes, right? For nothing, just because you knew about the program, you're a Levinson Allianz agent, right? So take advantage of this stuff. That's a new sale right there. Plus, move Allianz, or if you're already with Allianz with Levinson, you take advantage of the scholarship program and the new Luma consumer sales presentation software at no charge. Okay, which we're rolling out by the expo. Okay, so two great platforms for free. Okay, as long as you're with us. So no charge, no nothing. All right, let's keep moving forward because I gotta move quickly through these slides, but there are some great pointers here and things that will help you learn and move the needle. Let's move to the first slide here, and then we can jump in. So, talking about resources for IUL. There we go. Perfect. Okay, so everything is on our website. We have trainings. I mean, we cover everything from A to Z, from a 101 basic level to a more complex sales strategy level with Joe Ross. We have everything you can think of with prospecting, marketing library. We have co-brandable videos and in e-blasts and flyers that we can actually brand for you. You just pick and choose what you want. It's all free. Let's keep moving forward. So this is the Sage Scholarship Program and 100% complimentary to you and the consumer. The best part is, top right corner, Allianz was actually the first carrier to approve this, right, for their policy holders. So think about this. Not only can you use this with your new sales, new opportunities, but if you've been an Allianz agent for 11 years, you can go back to all of those policy holders, right? To say, hey, great news. Since I'm a Levinson Sage approved agent, I can give you the scholarship program for little Johnny, little Jenny at no charge. They're going to say, wait a minute, this is free? And you're going to say, yes. Now, oh, by the way, do you know anyone that would also like this, that maybe has children that are going to college, right? Or want to talk about an IUL for retirement? Think about the referral stream that you're going to get from this. So not only can you give it to these new prospects, but think about all of the older policies in force that you wrote with all of those carriers on the right side. Okay, it's free. These are free leads. You just got to get scrappy. Now I'm going to show you an example using Allianz IUL with the scholarship program. Okay, and again, this makes for a slam dunk sale every time. So what we did here, right? We're going to the breadwinner, right? Put your agent hat on, right? We're going to the breadwinner. They have a 1-year-old daughter, right? Female in this case. We're putting in $100 a month. Okay, so now obviously we have cash accumulation along the way. God forbid she passes away. There's a tax-free death benefit. Okay, chances are that won't happen. But let's fast forward. Let's look at 20 years out. Okay, now look at this return and tell me what client's going to say no to this, right? Everyone is going to be in, especially a grandparent, breadwinner, whatever. Doesn't make a difference. So $100 a month, 20 years later, you have a total of $24,000 that the client spent, okay? And then a tax-free death benefit along the way, plus living benefits. Now, cash values, right? Year 21, almost $40,000. So let's fast forward, right, to that year 21, total value with the scholarship program, $80,000 to be used for a 4-year tuition, okay? And the policy continues. So now little Jenny has a great retirement plan, right, at age 65, age 66, and use this to pay for a 4-year tuition. And God forbid she passes along the way, we know what happens. But look at that example, how 24,000 turned into 80,000 in 20 years. Okay, and then again, the policy continues to retirement, and then you can cash out or whatever the options are. So I love this scenario, and it makes for such a great sales strategy combined with the scholarship program. Let's keep moving forward. Lead Star. So they're going to be at our expo. And in fact, just 6 weeks away, April 17th, they're going to have a booth there. This is a free platform for insurance agents. It has a CRM tool, a dialer, a recorder. You can purchase co-op discounted leads, everything from A to Z. Or if you just want to use the seminar leads or mailers, you can do that too. Final expense, health. They're working on IUL as we speak. But again, complimentary because of our new partnership with AmeriLife. Let's keep moving forward. These are two great top performing IUL posts that we handpicked before we started this presentation. Left hand side, very simple, 401k versus IUL. Look at all the green check marks, right? It makes for over 100 shares, likes, and comments. All right. That's all free leads for you. If you're that agent, you should be doing something just like this when we hang up the phone. And even if you get 6 people that like it, reach out to those six free new leads. You get it. Right hand side, one plan that does it all, right? This is talking about IUL and all the options. Most people have no idea. That post created over 100 shares, likes, and comments. And again, you get it, right? You don't have to do exactly the same. Change a few spokes, get it back out there. The next slide here is premium finance, right? By leveraging IUL. So this is a great episode 65. If you have a higher net worth client, right, guy or girl, whatever the case is, business owner, family member, they're worth, let's say, 10 to 20 million, and there's an opportunity there, right, to jump in. Think about average case size. You're talking 100,000 to $1 million a year of target premium. Commissions will change your life. Okay, and they do all the work for you, even the servicing work, and you still make the majority of the comp. That's a great episode to check out. The next slide is our 411 Life and Annuity newsletter. So this should be in your inbox. If you're not getting these every other week, let us know. But it's a one-stop shop for all carriers, product, and updates at Levinson and Associates. Okay, next slide is, and I hope you already registered for our expo. If not, do it as soon as we hang up the phone. It's complimentary. We are capped at 300 agents for the room per fire code, so you must RSVP now. As you notice, top left, you'll see Allianz, and then we have all of our superstar companies on the life, annuity, and even health side this year, and LeadStar is going to be there as well. This will be an event you won't forget, and it will change your practice for the better. I promise you. If it doesn't, come see me, and I would be very, very surprised. Okay, this is our last menu of training events that are upcoming as we speak. A couple things I want to point out on the bottom. If you want to learn more about IUL, my number one IUL sales coach, Joe Ross, is back on May 14th. That's going to be a great episode. Okay. And then, of course, we have the Sage, the new CEO of the scholarship program, just above that. And then you'll see all of the other life and annuity carriers and presentations. We'll send this out in the thank you email. Let's move to our final slide. And I know we're a few minutes over here. I apologize. The top left corner, this is our Positive Tuesday quote. Quitters stop when they fail. Winners fail until they succeed. Think about that one, right? Nonstop to the top. You do whatever it takes. Get scrappy, get the word out. Even if you start small and you have 4.5 followers on social media, it's okay, right? Keep your foot on the gas. Use some of our ideas, our strategies. If you get a new lead or two, one like or a comment, okay, it's a win. It's more than you had yesterday. But you got to get this stuff out to the masses, right? Paid ads now. Put a 2-minute video together. Spend a couple $100 on a budget. Use LinkedIn, Instagram, Facebook. See what happens. Okay, if you get a couple new leads, it's a win. So anyway, you get the idea here. Question of the day, and we'll put a bow on this. Make sure your little fingers are on the keyboard. Question is, and you got to be quick. You got to be first and accurate. Question is, I spoke about the Sage Scholarship Program. We're having a webinar with the new CEO. Tell me the date of that webinar, and you win Apple AirPods, an IUL prospecting book on us. Andrew's going to tell us who was first and who was correct. Andrew? Here we have a winner today. Sage Scholarship Webinar. We have the new CEO that's going to be our guest speaker.
Yeah, so we have Michael C.
Michael C. The answer was April 9th. So I'll leave you with this. So at the end of the day, right, we just saw the top IUL in the industry, bar none, hands down, A+ rated, wonderful. We're not saying, hey, there's not a scenario where whole life is going to be great for that client, because in some cases it will be. But we just wanted to share the facts and know, especially for the younger professionals, you're seeing the reasons why. Okay, IUL stands apart. But call any one of our marketers. We would be more than happy to literally run a whole life and an IUL example and show you what is going to perform better for that specific client, and then give you all the tools and application and contracting so you can go out and make the sale. With that said, have a great Thursday. Thanks again, everyone. Reach out anytime for anything. We are here for you. Great selling.